Yo, what's good, everybody? Welcome back to another training from MichaelCrowe. I appreciate you guys all tapping in with me. I apologize for the couple of minutes I was trying to log into my other platforms and I was having some trouble. So anyhow, I'm here. Um, First and foremost, let me mute you. Let me mute you guys first. Um, So if you have questions as we go along, just let me know. Type it in the chat, raise your hand. I'll try to get to it. I'm going to try to breeze through some of this stuff pretty quickly because I've touched on some of these things in some of the other trainings, but we've had an influx of a lot of new members, obviously. And so I've been asked quite a bit to do this training on setting up um, stock charts, trading view, whatever it is. I don't have all the familiarity with some of the other trading platforms, but I personally use trading view. I use stock charts. But I think that the others like thinkorswim and all that stuff is probably pretty easy to navigate in terms of setting them up with certain indicators. So in terms of understanding the indicators, it's also important to understand what they mean, because if you don't know what they mean, you don't know how to interpret the data. So I'm going to try to breeze through this stuff pretty quick, I guess, and to be able to show you how to do everything. But that being said, just give me a second. Let me share my screen with y'all. Okay. Can you guys see my screen? Should be able to see the stock chart for SPY, and then flipping over. What about if I flip over here to this keynote? Can y'all see the keynote? Everything's good. All right, excellent. I had some trouble with this last time going between the two screens. So I'm going to keep it on. I'm going to keep it on this screen just because I can toggle back and forth easier and play the slides this way. So stock chart trading platform indicators. This is the biggest one: support and resistance, 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 support and resistance. This is everything, right? I want you guys to really understand this, okay? Support and resistance are single-handedly your most important indicators, and they're the primary indicator, support and resistance. Everything else on your charts is secondary to it. Like everything is going to follow that support and resistance. And then you're like, well, how do I understand support and resistance? I don't know how to read support and resistance. Then it goes back to you being able to read the candlesticks. And that's another lesson. So, which I've also given before in the Wealth Squad. So if you're unsure about support and resistance, or you're not that good at it and you just don't feel confident, keep practicing over and over and over and over and over again until you get it. Like, just don't give up, because once you understand support and resistance, you can do everything. If you don't understand support and resistance, none of the other indicators will make sense to you either. But if you master support and resistance, you master your income, period. Right? Chris always says it. I always say it. Like, if you can read a stock chart, it's a legit cheat code for the rest of your life. It's a skill that nobody will ever be able to take away from you. It's a skill that, unlike athletics, if you don't do it for a while, I don't really feel like you get rusty at. It's just something you habitually pick up on. So once you understand it, once you have it in your bloodstream, it's embedded in your DNA, nobody can take it away from you ever. And that's pretty powerful stuff. So all of these indicators, it all goes back to understanding support and resistance on the stock charts, which is interpreted by understanding how to read the candlesticks on the stock chart. And that goes without saying too. If you don't understand how to read the candles on the stock charts, tag me in the Discord. I would prefer you tag me rather than DM'd me, because me answering your question in the Discord probably helps other members, and we have a large community, so it becomes a collective effort. Whereas the DMs are very personal, they're one-sided, right? Because it's only one person, or not one-sided, but like one-dimensional pretty much. Whereas if you tag us providers in the Discord itself, it allows all of the members to see it and to be able to communicate and engage, and that strengthens the community. So if you don't understand those things, feel free to tag myself, tag Ray, tag Kia. We're happy to help you understand them. Talking about the basics, you've got the simple moving averages, right? You've got the 20-day simple moving average. And so what this is that it's an average over the past 20 days of the stock price that's used to determine short-term trends in the stock market. So if the stock price is above the SMA 20 or the 20 SMA, it suggests that the stock is in an uptrend. And if the stock price is below the 20 SMA, it suggests that the stock is in a downtrend, right? Similarly, you look at the 50 SMA, it's a measurement of the past 50 days of the stock, and that determines the medium term trends in the stock market, right? And so if it's above the 50, it suggests that it's in a strong uptrend. And if the stock price is below the 50, it suggests that the stock is in a strong downtrend. And then you've got your 200 SMA, right? The 200 SMA is a measurement of the 200-day of the stock price, and that determines the long-term trends of the stock in the stock market, right? And if it's above the 200 SMA, just like the others, it's now in a very strong uptrend. And if it's in a price below the 200, it's in a very strong downtrend. This goes without saying. So these sort of move hand in hand, the exponential moving day averages. So I personally use the EMA 5. I personally use the SMA 20. I don't really pay attention to as much the 50 and the 200, but I do use the 200 for when I'm entering swing trades and I'm looking at sort of where a swing trade will capsize and go backwards, right? When it'll pull back, when I'm going to exit the trade. If the share price is trading under the 200, that's generally when I like to get into the swing trades, is when it's under the 200, because then it has room to move, and it gives you that potential for profit. So this will be the sort of crossover link that runs hand in hand with the SMAs. So the EMAs, the 5 or the 10, whichever you choose, you can stretch this out for however many days you want, time periods, but it's an exponential moving average of the past 5, 10, 15 days of the stock price. And it's used to determine the short-term trends in the market. And it's more sensitive to the price changes than what the SMA 20 is. So you'll notice on the stock charts, and I'll switch this over in a minute to stock charts so you can see it. You'll see that the EMA, whether it's the EMA 10, the EMA 5, the price fluctuations of that are generally going to run almost identical to the share price itself. And if the stock price is above the EMA 5 or the 10, whatever number you choose, it suggests that the stock is in an uptrend. And if it's below, same thing, it's in the downtrend, right? Same thing. That being said, with the SMAs, either of them, and the EMA 5 crossovers or the EMA 10 crossovers, whatever it is, right? So this occurs when the short-term moving average crosses over the long-term moving average. And then this is basically considered the bullish signal if the short-term moving average crosses above the long-term moving average. And then on the flip side, it's a bearish signal if the short-term moving average crosses below the long-term moving average, right? And so just like I said, the SMA represents the short-term moving average. The SMA and the 200 represent the long-term moving averages. And so the EMA 5 stock chart indicators, they're used to help you determine the direction of the trend and then confirm from the crossover signals, right? So if it crosses below, if the 20 crosses below the SMA 50, it's a bearish signal, indicates that the trend is weakening. And if the EMA 5 will end up showing a negative trend, which confirm that bearish signal on the crossover, right? And I'm gonna show you an example here in a second. So you can look and see at the short-term crossovers here at the peaks of all of this, right? The longer term moving average crossing above the shorter term moving average is considered the bearish signal, right? At the peaks here, all in this area right here. And then you have your longer crossovers, which the short-term moving average crossing above the longer term moving average is considered a bullish signal, if that makes sense, right? You can look on the stock charts and see it every time it runs to the upside or to the downside. It's when those 20s are crossing over those EMAs. Not so much the 50 or the 200, but mainly the 20 and the EMA 5s. Now with the 200-day, you can use the 200-day as a support level, right? This is Cisco. Just over the 200-day. It's a couple days old, but because I think Cisco's right around $48 or something right now. But you can see how over the course of 200 days that the stock is bouncing off of this 200-day support line, right? So those are all indicators of trends, right? And the idea is that, look, that if it breaks this 200-day to the downside, this becomes a very bearish signal if it breaks the 200. Now here's some scenarios for you, right? A lot of people have asked these things. Let me just check in with y'all in the chat here. Everybody's good. Can you repeat the 20-day moving average, please? Yeah, so it's a measurement of the stock price over just a period of the 20 days for Michael and Derek. That's what that's going to do, right? Same thing with the SMA 50, the SMA 200. It's a measurement of the stock price over 20 days, the measurement of the stock price over 50 days, a measurement over the 200, right? So here's some scenarios for you, right? Because a lot of the times as traders, we have these signals on our charts and they're all giving mixed signals. And so they're like, what does it mean? I don't know how to trade this trend. So what does it mean if the SMA 20 indicator is above the 50 and it's above the 200? This is considered a strong bullish trend, right? The short-term trend, the 20, is trending upward and it's stronger than the intermediate term trend, which is the 50, and the long-term trend, which is the 200, and it's indicating that the market is bullish and investors, traders should consider buying whatever security they're trading, right? So if it's above, if the 20 is above the 50 and it's above the 200, it's a bullish trend, right? If you're trading options, buy calls, right? If the 20 SMA is above the 50, but it's below the 200, this is considered a bullish signal, but to be cautious about it, right? So this means that the short-term trend, the 20 is trending upward, but the long-term trend, the 200, is still bearish. And in this case, investors and traders, you have to be cautious as the long-term trend could soon influence the short-term trend. So this is a situation where you want to be cautious. And if you're trading options or you're trading shares, maybe you don't trade as heavy. You just trade with caution on that. What does it mean if the SMA 20 is below the 50, but it's above the 200? So this is considered the bearish signal with some caution also. So on the contrary to what I just said, it's flipped a little bit, right? So the short-term trend, the 20, is trending downward, but the long-term trend, the 200, is still bullish. So in this case, as the long-term trend, it could possibly influence the short-term trend, if that makes sense, right? And then the last scenario that I think covers them all, what does it mean if the 20 SMA is below the 50 and it's below the 200? And this is a strong bearish signal, right? The short-term trend, the 20, is trending downward and it's weaker than the intermediate trend, the 50, and the long-term trend, the 200, right? And so that indicates that the market's bearish and that traders and investors should be selling the share price or selling the stock, right? And we always hear, like, you know, anytime that all the panic sets in, right? These are also times to be cautious too, because even though that these signals are happening, it doesn't necessarily mean that it's a shitty company, right? It's just volatility in the marketplace, whatever the economy, those sort of things. Just because a stock is selling doesn't mean that it's a terrible company. You need to get out of the trade. You need to sell your portfolio. That's not what that means, right? It's just fluctuations in the market. It's market rotation. It's all these other things. So know what it is you own when you're using these indicators, because the indicators aren't always going to indicate whether or not like the company's good or bad. It's just volatility of the marketplace, right? Does that make sense for everybody that we covered that? Everybody should be muted. I muted everybody already. Yeah, mute yourself, y'all. One of the so I want to pop over here since we are talking about this, right? So let me just go over here. I'm just gonna pull up SPY. So the 20 and the EMA 5, right? Using stock charts. Everybody can see this? Can everybody see stock charts? Cool. All right. So with stock charts, I'm going to zoom in a little bit just so you guys can see better, right? This will always indicate what your indicators are up here, right? Stock charts. And then you come down here, you have to have an account to be able to save this every time, right? But you can come here to the overlays on the bottom and you can put as many of them on here as you want, right? I have the SMA 20, the EMA 5, but you can put, you can put some of these other indicators on there too. And the other indicators that I'm going to talk about here also. But just like I was saying before, right? Let's just say here, I'm going to simple moving average. There's the 50. Let's just put these on here for a second. Let's the 200, right? And then you update that. And then if you want that on there all the time, you just go to save as default, and then that'll upload it every single time as what that will be, right? And then you color code them however you want. You see the 200 is this magenta line. You've got the EMA 5, which is it's actually kind of hard to see. The EMA 5 is this purple, the 20 is this green, and the 50 is this green one, right? And so you can see the share price is above the 200, it's above the 50, and it's bullish, right? That's where we're at with the market. So everybody's panicking about SPY, but it's sitting above the 50 and the 200, which means it's a bullish signal. So my guess with all of this stuff is that the market's not going to be tanking very much. You can start to get concerned around the 390s, but we've already passed that. We passed that last month on the 17th, right? The market has been bullish ever since. So that's where I'm at on that analysis, right? You could just use the indicators as a guide, right? So jumping back, talking about the RSI, the relative strength index. So this is used to determine the strength of the stock's price action, and it's calculated by using the average gains and losses of the stock over a certain period of times. And usually this is always 14 periods, 14 days, right? And the RSI ranges from 0 to 100, and it's considered overbought when it's above 70, and it's oversold when it's below 30. So coming back here, you have your RSI up here, right? You've got your overbought range up here. You've got your oversold range down here. And you can see that it's pushing the extreme, and you can play support and resistance from the RSI if you really want to, right? So that's where your RSI will be on your chart. And then if you're in stock charts, you can come down here and you can change the parameters. You can change the number of periods, the number of days. You can change the position of how you want it on the charts. And then also with trading view coming over here, you click on this little indicator button up here, right? And I just use a basic one here, the relative strength index. You can type it in and then you can favorite them. And then it'll usually load at the bottom of your screen. The RSI I don't have on my trading view. I really only pay attention to the MACD and the ATR in these scenarios because they all sort of run hand in hand. So that's where I'm at with that. But when the RSI is above 70, it indicates that the stock is overbought, like I said, and it may be due for a pullback, right? And when it's below 30, it indicates that it's oversold and it's due for a rebound. So going back to this chart, when it gets up here in the 70s, that's when it usually hits that pullback. And you can trace these levels based on all of this resistance and this support level to how far it pulls back from, right? And vice versa on the bottom of that. And so a lot of the times you see Chris or myself going into swing trades when it's in this overbought territory, because you can just go off of the trends in the RSI of seeing how much room you actually have to move within the stock charts to be able to, run it up on your share swing trades or your option swing trades. Does that make sense? Derek, what platform can you recommend a chart on for beginners? I personally like TradingView, but TradingView, I don't know if you have any other sort of a trading platform, if you have like Thinkorswim or TD to have Thinkorswim or whatever, but I like TradingView. What if the 20 is below the 50 and 200, but the RSI shows it's oversold and the MACD is crossing over? Would you still make it bearish? Yeah, Ryan. So I'm going to answer this question here because I'm going to talk about these divergences, right, of how this happens. So, which leads into my next question, the RSI bullish and bearish divergence. So this occurs when the RSI is making higher lows while the stock price is making lower lows, indicating that the stock may be due for a rebound. And the bearish divergence occurs when the RSI is making lower highs while the stock price is making higher highs, indicating that the stock may be due for a pullback. So the divergence is almost like, don't use the RSI as a real-time indicator because it's not. It's basically how the stock is trading against itself, but it's not a real-time up-to-the-minute data. It's delayed data. It's not real-time. You can use it as a guide, but there's a lot of times too when the share price and the RSI are moving in opposite directions of each other. And so that's where these indicators come in, right? Where your interpretation of the data has to come into play for you to understand the indicators that you have on your charts. Ryan, does that answer your question? Does RSI guidance change ENTJ respect to different time frames? Example 30, 70 under overbought. What time frame does this refer to? So this refers to whatever time frame, right? It doesn't matter if it's the day chart, the 5-minute chart, the hour chart. The RSI is going to be this. The RSI will probably change on all of those charts, right? So let's hop over and look at it, right? So this is the day chart. RSI is on SPY. It looks like it's at 65, but let's just go and look at, say, the 30-minute chart. It's a year chart, but it's on the 30-minute period, right? So now your RSI is in 73. So if you're day trading for this scenario, you're going to be panicked, right? You're going to be like, oh, it's an overbought territory. I'm on the 30-minute chart. What do? I need to get out of the trade. But the day chart is saying otherwise. The day chart is still giving you more room, still giving you more cushion. So you need to understand what time frames you're looking at, right? And let's go say we'll stretch this out. Let's look at the 60-minute chart on SPY, right? So the 60, did that update? Yeah. So the 60-minute chart is basically the same, right? The 30 minutes. So 73 is where the stock price, the RSI is at on the chart for this. So if you're day trading it on this time frame, you just have to be careful, right? You tread lightly in that scenario, right? If you go to, you do the 2 hours, right? On this one, the RSI is going to be slightly different. It's going to be just under 73, right? So now it changes to 70. So it's always good to understand how you, whether you're doing screeners on FinViz or you're updating stock charts or TradingView, to understand what parameters you're putting on your chart and the difference that they make to what data you're seeing. Your interpretation of the data is really key. Yeah, Floyd, TradingView gives you 3 indicator limit. You have to pay for 5 or more. So my personal opinion is that I want more tools. I want more tools in my tool bag. I want real-time data, so I pay the subscriptions. And also, like, paying the subscriptions, I get it if you can't afford it, but it also puts the pressure on you to actually like lock in and execute on what it is you're doing so that you can pay for the subscriptions. That's how I treated it when I was, first starting with everything. But everybody's different. Ivan, can you specifically show how to read the SMA 20 indicator? Yeah, so coming back here, I'm going to put this back on the daily. Right, so understanding the 20, which is, I'm going to take off, and I'm going to take off the 200, and I'm going to take off the 50. Right, so with the 20, which is this green line, I made it green because green is money, green is your friend. That's why I named that, and just, the EMAs. But the 20 SMA, right, you can take these off your chart and look at the stock chart, and you should be able to determine on the stock chart without looking at it from the indicators where those crossovers happen, right? You see the crossover here happening between the EMA 5 and the 20-day. And like I was saying, the EMA 5 is basically going to follow the exact trend of how the stock price is moving, right? This whole 5-day exponential moving average, right? And the 20-day, it's sort of a cumulative average over that 20-day period of time, right? And any time that you see it cross over is when it runs, right? Whether it's to the upside or to the downside, right? From here, and it just sort of broke that trend. But when it breaks back above that, that's where the trend changes. Hopefully that makes sense. Does that answer your question, Ivan? Do you have to have a stock charts account for the 30-minute chart? I believe that you do. I'm not for sure. And I don't know who this is on the iPhone, but they say the less indicators, the better. Yes, I agree with that. The simplicity is key with your stock charts. Don't clutter your stock charts with a ton of indicators. Keeping them simple is going to give you clarity of mind. It's going to help you read your stock charts better. And, you can pick and choose the things that work for you and the things that don't, and just, single them out from there. So moving along from the RSI, now you have the MACD, your moving average convergence divergence, right? So the MACD is this down here, right? The MACD is this black line, and the signal line is going to be that red line, right? So the moving average, the MACD, it's calculated by subtracting 26 period exponential moving average, right? And look, this showing up on the chart, the math has already been done for you. It's already calculated for you. You don't need to be a nerd and do it yourself. Technology has done it for you already. Leverage technology, right? So this is going to give you that indicator of the MACD. But just so you understand what it is and how to do it, this is what it is, right? So it's by subtracting the 26 period exponential moving average from the 12 EMA, and then a 9-period EMA, which is the signal line. It's plotted on the MACD. And what this does is that it generates the trade signals, right? So the MACD line represents the difference between the 12-period and the 26-period EMA, the 12 EMA, the 26 EMA, while the signal line represents the 9 EMA of the MACD line, right? So when the MACD line crosses above the signal line, when it crosses above the signal line here, crosses here, crosses here, crosses here, the black line is crossing over the red line, it generates a buy signal. And when it crosses below the signal line, here, 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 that generates the sell signal, right? Makes sense? And the MACD histogram is the representation of the difference between the MACD line and the signal line. That's all that is. And if you look at it, it's essentially a mirror image of the stock chart, right? It's not precise, but it's a pretty close representation of a mirror image of what the stock is doing. And if you look at the crossovers of the MACD and the crossovers in the EMA 20 and the EMA 5, it's almost identical every time, right? So it's just a mirror image of that. So when the MACD line is above the signal line, the histogram is positive, which indicates a bullish trend, right? When the MACD line is below the signal line, the histogram is negative, which indicates the bearish trend. So talking about this crossover, like I said, it happens when the MACD crosses over the signal line, and the crossover is a strong indicator of the trend change, and it's used to generate the buy and sell signals, right? So a lot of the times when Chris gets into trades, myself, we look at that MACD, right? We're looking for that MACD to just sort of curl up and roll itself above that line. And every time it rolls itself above that line, that's when you enter your trades. And then you'll sell towards the top as it's starting to hook downward, because every time it hooks downwards, it's gonna break to the downside. There's breakouts and there's breakdowns, right? We always talk about, oh, it's breaking out, but you also have to acknowledge when the things are breaking down. And it usually occurs when those SMAs and EMAs happen. Now, granted, these are indicators on your chart, but these are like individual, these are invisible indicators, right? This is just enabling you to see them. But think of them as being invisible, that they're not even on your stock chart. And just, Larry Bird used to always shoot free throws at night. So whenever he showed up into the games, he was a 90% plus free throw shooter, right? So it's the same thing with the stock charts. If you can read a stock chart without the indicators on your chart and understand where the breakouts and breakdowns happen, you're going to be a beast in the market. Because then when you put the indicators on your chart, everything becomes easy and you can see the trends a lot quicker, right? So just play with things, challenge yourself. I did it too for myself, where I took the indicators off my chart. But the indicators are there to make it easy for you. But you should still be challenging yourself to be able to notice them without any of those invisible lines. Because look, ask yourself this question: if technology just vanished and we didn't have these capabilities, could you still read a stock chart? There was a period of time, Uncle Gerald talks about this a lot, where he was mailed the stock charts. Those mailed versions of the stock charts don't have indicators, right? You're just looking at stock prices, stock fluctuations. So if you can't read a stock chart without the indicators, you got some work to do, right? And it'll take time, but it's just another challenge for yourself to be able to master your craft, right? I use TC2 and trading. Have you used? Yeah, I don't use Hernandez. I don't use Thinkorswim. I only use TradingView. TradingView is my only one that I use. As a new trader, what would you recommend as a good time frame when looking at a chart? I always look at the daily charts. The day charts is where I live. Ivan, you're reading it as a MACD is crossing above or below EMA 20, correct? The SMA 20. Reading it as the MACD is crossing above the SMA 20 in the EMA 5, right? That green line is the SMA 20. The EMA 5 is the purple. Are you seeing any indicators that could have hinted at the movement seen on the MACD line and chart from 10.4 through 10.14 seems to cross a couple of times? So 10.14, we got to come back a little bit here. Let me come back a little bit. What'd you say that was? You said it was 10.4 through 10.14. All right, so that's October. So I just switched it to trading view so I could actually see the days, because you can't really see it that well in stock charts in the same way. Yeah, so here's the thing. When you look here and you see where this sort of crosses, it's close to this same area of where this is going to touch on the MACD line, right? So as it's consolidating, you see that the share price is below the EMA 5 and the 20-day, but you look down here at the MACD and you see it starting to trend downwards to hit the signal line, right? So to me, if you're looking at this, right, if you stretch this out and you look at this little period of data from the 4th until the 14th, you see that it's really kind of just moving in one direction sideways, right? And from this point, you see that it starts to downtrend in the MACD. And then from here, it hits that and then it starts to run upwards again, right? So that's the signal to be looking for too, of not just the share price being below the EMA 5 and the 20, but also where is it sitting on the MACD in relationship to that, right? Because just as much as the 50, the 20 are support and resistance lines for the share price to bounce or pull back, the signal line is that support or resistance for the MACD, right? It's the same sort of principle, the same concept. So and just like I was saying, the RSI isn't that real-time indicator. You have to know how to interpret the data, because sometimes the stock chart, the RSI, the MACD are all speaking different languages a little bit, right? There's slight variations that you got to be able to pick up on. And it's your attention to detail with finding out what those little nuances are that are going to make you really sharp in the market for being able to get into swing trades early and to be able to exit very profitable, right? It's not always easy to distinguish, but it's good to kind of like your job when you're looking at the stock charts. And I say this all the time, is like your job is to be a detective, to pull apart the pieces of the puzzle and find clues, find patterns, find trends that are repetitive and consistent, right? Because when you can link all of those together, that's how you get confirmations of data, right? In the same way that you get the 2 candlestick confirmations, you're looking for the same number of clues within the stock charts based on certain trends or certain patterns, right? Whether that's advanced trading patterns or it's just the MACD touching the signal line as the share price is below the 20 and the 5. So it's you being able to pick up on those that are going to make you sharp. Make sense? All right, moving on. So one of the other ones that you have is VWAP, the volume weighted average price. Now, a lot of people use the VWAP for trading options. You can use it for day trading, swing trading shares also. So did I go to? Okay. So what the VWAP is that this calculates the average price of a stock based on the volume of shares that are traded over a specific time period, which then helps traders, investors determine if the stock is being bought or it's sold at a fair price. And it does that by comparing it to the current price to the VWAP, right? It sounds complicated, but it's just taking the culmination of the share price and it's weighting it against other variables, right? So one of the, in talking about the EMAs that we talked about, the 5 and the 10, what those were, it's the same thing with the EMA 9. And so a lot of the times when people are trading shares or they're trading options, they'll trade the VWAP EMA 9 crossover as an indicator, right? So if you if you have trading view, you can come up here to this chart indicator. You can use this here. It's just a basic one for me, the VWAP, MVWAP, EMA. I don't use the MVWAP. I use just the VWAP and the EMA crossover. I don't really pay attention to this all the time. It just depends on the volatility of the stock itself. And I say I don't pay attention to it because I've trained myself to be able to see things without having it on my chart all the time. So that's the only reason why. But if you let me just take some of these things off of this chart just to make it clear for you. So you got the crossover there, the 200-day. Okay, 200-day I'm going to leave on there, right? I'm just going to hide these. So you can hide whatever you want here. But what this indicator is going to do, just like I said here, it's just the basic, right? The Derek LA Flame that I have on there, right? And it's going to give you the sell signals. And you can click on, you go to this little icon here in Trading View, right? And you see your settings, and you can color code this however you want, right? So you see that the VWAP is yellow, and then you come to your first EMA line, right? Which you would basically change this a different color, right? Because then you come to your inputs, right? Your VWAP length, you choose whatever duration that is for you. Your RSI, all of that stuff you can change, right? You change this to the VWAP length, you leave that at 1, leave this at 6. So it's basically the VWAP in the EMA 7. So you just change this to 9, right? And based on the color coding of how you have this, if you're getting into this trade, the idea is when the VWAP crosses the EMA, which is this yellow line here, and this yellow line is the VWAP, right? This is when you're either going to go long or you're going to go short, right? Kia trades this all the time. I think Ray does too. I'm not for sure. I know a lot of people in the Wealth Squad use the VWAP EMA 9. It's a pretty proven strategy for being successful. If you don't understand the VWAP and the EMA 9, it just takes some time to learn it because it can get complicated and it can get a little tricky sometimes. Because just like I was saying on the other things, is that all of the data might not always be speaking the same language. So because you can see the difference with the VWAP as opposed to the EMAs. But if you notice here at this peak right up here of how sharp this downtrend was as it crossed VWAP, right? And then on the contrary side of it, you have just it's not as sharp here on this EMA crossover, but when it crosses the VWAP, right, and these little long signals, the data is much stronger. So you just have to be able to determine what it is you're interpreting on each of these indicators. Does that make sense? So once you see the MACD start to cross and the EMA 5 curl up on the daily chart, what goes into your thought process to choose your swing trades versus options calls? I look for the 20 to cross the EMA 5. I don't necessarily pay attention with, I'm paying attention to that 20-day. And then the share, well, I guess the share price and the EMA 5 are pretty much the same. But if it's crossing to the upside, there really isn't a whole lot of thought process. It's just like, okay, this is crossing over. It's a bullish trend. Don't overcomplicate the process. Don't overanalyze the process. It's really, really simple. There's not a whole lot of thought process that goes into those things. It's just, it's like I said, going back to the very basics of it all, it really is support and resistance, understanding what's the next high on the candlesticks ahead of the target of where you're at, right? So just say, for instance, SPY right now is at 410.80. So in my mind, I'm thinking, okay, so I'm bullish on SPY above 4910. This is what I said today in the options chat. Above 4910, look, SPY has the possibility of opening at above 414.38 tomorrow, based on the average true range, which I'm also going to talk about next. But it's understanding what are the next targets and is it feasibly possible for the stock to get there based on its daily price action movement, right? Those are all things that go into you being able to interpret the data on the charts with these indicators, right? Indicators are just indicating trends. That's it, right? But you have to pay attention to price action movement of how it moves. Each stock has a personality. Each one has a different profile, in the same way that we humans have personalities and certain profiles, right? You have to be able to gauge those personalities. And the more you trade them, the more you look at the charts, the more you come to understand them. Just the same as the more time you spend with a human, the more you come to understand them too, right? So it's all related. Use life experiences, use life metaphors to teach you the stock market. It's hand in hand and it runs parallel to each other, right? Make it easy for yourself. If you're a visual learner, put pictures on there, draw stuff, mark up your charts, right? If you learn a different way and you need to listen to an audio book, then listen to the audio side of things. You have to cater to the way that you learn the best, to be able to interpret all the charts. All right, so moving through to the VWAP, right? So this moves us on to the ATR, the average true range. I talk about this one a lot because I use this one a lot. I know Ray uses this quite a bit too with the strat. I believe Kia does also. This is technical analysis. So what this technical analysis indicator does is that it measures market volatility, right? And it helps traders, investors understand how much price is moving over a given period of time, which then provides you the insight to the market strength or to its weakness, right? And so I talked about this in a previous training, but to touch on it, it's calculated by taking the difference between the high and low price of each day, and then you average the value over a set number of periods, which is usually 14 days, right? So you calculate it based on the maximum of three values: the current high minus the current low. That's one way to do it. The absolute value of the current high minus the previous close, and the absolute value of the current low minus the previous close. Those are the ways that you're going to measure the ATR, right? And like I said, technology has done it for you. There's no need for you to manually calculate it yourself to like try to prove the indicator wrong and think that you're smarter. The technology has already done it for you. Leverage technology in your favor, right? So the average true range over the specified number of periods is 14 days, and that's how you get the ATR. So with the ATR coming up here to TradingView, I'm just using just an average. So you can use the day range, average day range, or you can use the true range. I use the true range, but you can use the day range. And just conversely to the ATR, the day range is just basically on a daily basis how the stock is moving in terms of price action, right? And the average true range is a culmination of all of those day ranges added together and averaged out, right? So once I put the ATR on the chart, you can see that if you slide this over whatever day it is, right? You have this little cursor here. It becomes, so for today, SPY's ATR is at 643. This says that SPY on a daily basis is moving $6.43 on average to the upside or to the downside. So those become your channels. Those become your price targets to the upside and downside, sort of the maximum levels, because once it hits those targets, it usually pulls back or it bounces from those, right? And then on stock charts, I also put the ATR on here, right? I put the ATR down here. So that way, like, I don't have to come to TradingView. I don't have to come down here, and I don't have to scroll over here and look and see to get it precise. I can go to stock charts, come down here to where the indicators are, average true range, 14 for the parameter, right? And then you could just put where you want it on the chart at the position. You hit update, and then boom, you have your ATR of SPY. 638. So now on the high side, look, SPY possibly tomorrow can go. So if the ATR is 638, you take that from where the share price is now. So the share price is at 410. That's saying that SPY tomorrow could possibly hit 416.38. Right? A little bit higher than that because it's, SPY's a little bit higher than 410. But then on conversely to the downside, it also means that SPY can fall back down to 404, basically, right? So that's your little channel to trade from, right? So I'm going to screenshot this for a minute because I don't want to lose my levels. I hate doing my charts over once I find a level, but I'm just going to clear this chart for a second, right? So to the upside, if I'm marking a target, if I'm marking a channel, you can do the ATR channels, right? Average true range. You can put the ATR bands on your chart. And what this is going to do is that it's going to map it out for you already based on whatever levels these are, right? You have to just try and use the things that are accessible to you, but you can do it manually, or you can use the certain indicators that are on there. I like to do it just manually on the chart because, one, it helps me get sharp with measuring my support and resistance. But if you map it out, right? If you do this mathematically, you take the 410.80 of where SPY's at right now, and then you take the ATR of 638, that gives you a level of 417.18. You having a precise level is important in the stock market, because it really does hit these levels and pull back at these levels. So that's why you want to be as close as possible to these, right? So 417.18, boom, right? That's to the high side. That's the high side target. You take the 410.80 minus the 638, and you got 404.32 to the downside. Right. And so a lot of people are always asking, oh, where do we still holding? What are we doing? Are we getting in or out of the trades? What's happening? So tomorrow, when SPY opens, this is your price channel. This is your price channel. Now, it can go above that. It could also go below it. It just all depends. But this is where you trade from on the day chart, right? Now, if you take that down to a 30-minute chart, you still have your channel, and you can still trade based on the 30-minute chart within this channel here. And you know that if it breaks this bottom channel, the bottom of the ATR, what happens? It goes to the downside. Then it's basically going to go to the shadow realms after that, right? It's not going to hit this target. It's probably going to go all the way back down here to 400 if it breaks 404, right? These ATR levels are really strong indicators. So that's the background of those. Make sense? With TradingView being only viewing the charts, how would you relate that to your actual trade? Taylin, it don't matter how you can calculate the ATR, or Rome. It doesn't matter how you calculate the ATR. Technology already did it for you. Don't even worry about it. Leverage the technology. Yeah, Taylin. So the ATR, it's a culmination of the previous high and the previous closes over a period of 14 days. And it's the average of all of those days put together, right? So on average, over the course of 14 days, SPY is averaging $6.43 move to the upside or to the downside. I say to the upside or to the downside because you have to do the possibilities. You have to ask yourself what's possible, right? The possibilities to the upside is 417.18 for tomorrow. The possibility to the downside for tomorrow is 404.32. Now that'll change based on wherever SPY closes tomorrow. And when SPY closes tomorrow, it'll have a new ATR, right? You'll have to map out new ATR levels of whatever those are, right? But if you go and you look at the ATR levels when you've mapped them out, and you go look at them on a day chart of the candles that they run through, you see that it's the peak of the 20-day in the EMA 5. You see that it's the base of this candle when things break down. Coming back here, it's where this consolidation and this price movement happens. It's the peaks of these right here. You got to go back in time and see, and you start to see trends and you notice things that these become true levels, right? Another one to use, there's quite a few other ones, and I may cover this in another lesson too. But there's also an indicator called the Keltner channels. I know a couple of traders that use these, and it's basically leveraging the ATR. It's using the ATR, and you're basically trading the price channel, but it's the same thing as the ATR. It's volatility based. and it uses the moving averages and the average true range to plot the upper and lower boundaries of the channel, right? The upper boundary represents the resistance and the lower boundary represents the potential support. Conversely here, talking about that, right? This ATR level represents the upper boundary. That's the resistance. This is the support. That's your price channel from which you trade from, right? So from there, and then the way that you calculate the Keltner channels is that you plot it on the 20-day exponential moving average of the closing price, and then you add and subtract the average true range to create the upper and lower boundaries of the channel, right? It's pretty simple in terms of calculating what those are. But again, the technology has done it all for you, right? You can go to stock charts. You can put some of these things on there. Somewhere. I think you can do it on stock charts. Yeah. So you can put the Keltner channels there. The Keltner channels are really similar to the Bollinger Bands. It's pretty much the same thing, just different variations of what they use to calculate those, but they're both very effective. Some of these indicators are just cheat codes. Having these on your charts are cheat codes, but if you have too many indicators on your chart, it just gets to be cumbersome. I've traded with the Keltner channels. I've traded with the Bollinger Bands. I've traded with the Ichimoku Cloud. Some of these, like, a lot of them are cheat codes, and you just have to find the ones that work for you. The Fibonacci's also are very accurate, which I think I'm going to cover the Bollinger Bands. I'll cover the Fibonacci's. I'll cover the Ichimoku in some of the other trainings. I think I'll do a part 2 on this now that this is out of the way with a lot of the basics covered. And I'll do the next lesson as a successor to this one. But you can, again, you can put the Keltner channels on here, change the parameters to whatever you want, right? And it's basically going to give you the ATR levels of what those are and follow that price movement, right? And you can see of where it peaked and where it hit that resistance every time, right? You traded within those channels. It's basically a cheat code. And same thing with coming over to TradingView. You can put the Keltner channels, the Bollinger Bands on there also, right? If I'm choosing indicators on TradingView, I'm going to go to the ones that do have a lot more impressions on them, but then I'm also going to look at each one and see which ones really make sense, which ones make sense to me, like the trend-based strategy, right? This sounds like it's probably going to give you buy and sell signals with it too. I don't know if it added it actually. Yeah. So it essentially becomes you trading it within that channel from the bottom here to the top and from this central line here, right? And then obviously staying between your EMAs, and it's essentially giving you your buy and your sell signals, right? And insert the enter long command, insert the exit long command, right? It's telling you what to do at certain levels. So these become cheat codes for you. But to me, this is a cumbersome chart. To me, this is too many indicators. I don't need all this stuff on my stock charts. But for you, if you're just learning, sometimes using some of these training tools and these indicators are helpful if you're just learning, because it helps you see things a little bit better. So you just have to kind of pick and choose what works for you or not. Hold on, y'all. I'm just going through these questions. The channel you did is based on the high and low. Yeah, Hernandez, the channel you did is based on the high and low of previous day. So that channel is based on the ATR. The ATR, the average true range, the price action movement of SPY. That's where that channel comes from. But in understanding support and resistance of the candles, and talking about that, so you have this channel right here, but then you see where the share price is. Well, you're like, well, what do I trade now? I don't know. Where do I exit? Where do I enter? Whatever, right? So now you need to go back in time to where the share price was last at that level. And that's where you chart from, right? So you're really coming all the way back to like August, right? It's at the August, from like May until August is where you're getting your levels from. And I said that, okay, if SPY closes above 409.12, I'm bullish, and SPY could possibly open at 414 tomorrow. Why did I say that? Because if you look back here in May, if you look back here in August, you see that these giant candles, gaps get filled, right? And these gaps are going to get filled. And you see that those go all the way up to 414, 415, right? 414.76, 95-ish, somewhere around in there. If you look at 95, I think it's a little more accurate. I think Ray had the same level too. You look and see it's the base of all these candles, right? So it's at 410, but really your next resistance, your next target is 414, 414, 95, 96, whatever. And then above that, 417. That's how I'm mapping that out. You have to find the intra levels of the price channel of the ATR when you're doing these. Does that make sense? Yeah, Stacy, how do we assess risk and prevent losses if the price happens to move in an opposite trend? So if it moves in an opposite trend, it's not going to move in an opposite trend until it breaks the support of whatever price, that you have for support, right? So just for this instance, right? Just because, let's just say here, right? SPY doesn't become bullish until it breaks 404, right? But let's just say we're looking at it here on this day chart. But if it breaks right here, if it breaks 406.99, that doesn't mean that it's bullish or that it's bearish. It doesn't matter because it's still in this ATR channel. Just as easily as it could break 407, 406, it could still run right back up to 414, right? Or 417, sorry. Whatever price that was, right? I mapped out another one. Yeah, 414.95. So really, like, the trend isn't going to change until it breaks the lower ATR, right? Breaking a little support here within a price channel doesn't change the sentiment. It just changes the price valuation. So that's also important to understand. But if you're day trading this in shares or you're day trading this in options, look, you can get wrecked in that amount of time. But in those instances, that's when you're looking at it on lower time frames, right? When you look at it on lower time frames, say 30-minute, your levels are going to be a lot more intimate, right? You're going to be able to map this out a little bit better, right? You're not going to suffer such a huge loss when you're looking at and I have to go all the way back here, right? But you get the idea that you're coming back here in time, you're mapping out these levels of data on a previous time frame, right? To give you to help you protect your profits, basically, whenever you're trading, especially when you're trading options. But that's the difference of just understanding how those trends are affected when the price breaks through those to the upside or to the downside. Yeah, Salem, please do fibs. I'll do the Fibonacci's, and I'll do a part 2 for this on my next training. Do the charts show the price going outside of the Keltner channels in real time? Yes, like if you're using TradingView, yes. Or if you have paid subscriptions, yes. If you don't have paid subscriptions, no. You're not going to get the data in real time if you don't have paid subscriptions. That's for most of them. FinViz, Stock Charts, TradingView. Paying for the subscription allows you to have that real-time data. Like you have limited real-time data when you don't have those paid subscriptions. Jordan, I joined late. When will the recording be available? It'll probably be uploaded on Sunday. Are there any indicators you prefer to use for index versus traditional stocks, or is it all the same methods? Marcus, it's all the same methods. There's no difference between the two. A stock is a stock, an ETF is an ETF. It moves the same, but what you need to understand is how to read the candlesticks. If you can understand how to read the candlesticks, then that's where the secret sauce is, right? These are indicators, are just guides for you to notice trends, but reading the candlesticks is like paramount. Hernandez, I'm trading. What time frames are you trading with the most? I'm using the day chart. The day chart is where I get all my levels from. And then as I'm day trading, or I'm trading options, or I'm trading something that's more volatile and I need to protect my money more, then I'm going to lower it down to different time frames. But I look for the bigger picture. And if you notice, a lot of the times when I post stock charts for you guys, I'm going to take these Keltner channels off here real quick. You notice that whenever I post charts for you guys, I don't ever post a yearly chart. What do? I come down here, I change the year. I change this to like 5 years or 3 years or whatever, right? Because I want to see past data. If you look at, there's all this panic happening with SPY, right? But if you look at the 20-year chart of SPY, it doesn't even affect it at all, right? There's barely any movement of a downtrend, right? So it helps to look at the bigger picture. Like when I'm looking at certain stocks, I usually like to look at them on a 5-year chart or a 3-year chart, bigger picture, because also when you look at them over a 5-year period or a 3-year period, you can map out support and resistance a lot easier. You can see where these valleys are, and you can see where these peaks are a lot easier on all these trends, right? You can see what they call pivot points, where the stock price pivots, right? At the base of these, it bounces or it falls to the abyss. These are pivot points, right? So I zoom out to look at the bigger picture. It's important for you to do that, because a lot of the times, if you look at a year chart or something on a smaller time frame, it doesn't tell you what's really happening, right? It's just a fractal, fragmented view of things. So switching back over to those Keltner channels, the last thing really for this side of things is the time frame continuity. So this is all, I don't trade the strat, but this is more strat related. The time frame continuity, Kia uses it, Ray uses it, all the people in the strat use it, I use it. Not so sure about Chris or Crystal, but this is basically just putting everything on your chart. You can't put this on stock charts, right? The time frame continuity is just saying you're looking at the day chart, the week chart, the month chart, the quarterly chart, and the yearly chart, right? This is giving you the shorthand version of that language of whatever it's saying on the chart. And so in this scenario, it's saying that it's all bullish, right? I'm not going to enter trades unless it's whatever my time frame is that I'm looking. Like if I'm looking to flip my money in a month, I want to make sure that the day chart is bullish, and I want to make sure that the monthly chart, the week and the month chart is bullish for me to enter that trade, right? It's the same with options. I'm not going to enter a day trade on a call if the day chart is telling me that it's bearish, right? But if I'm day trading it and the day chart is bearish, but the month and the week and the month chart is bullish, then I might enter it and I might just swing it, right? Because it gives me more time. And the longer the time frame, it's saying it's just going to need more time on it as opposed to day trading it. So with this coming over to Trading View and putting that on the chart, I just use this here, the time frame continuity, the board rider B. And it's great. It's great because you don't have to look at everything. You don't have to keep switching between all these different time frames, right? You put this on your chart. I just need to re-highlight it, right? You put that back on your chart and it gives you the sentiment of what's happening. It just puts it all in one place. It makes it functional, right? And for those of you who know me in the squad know, like, I use FinViz for this same reason. Everything is here. I don't have to press 5,000 different buttons to get information. I can look here. I can look at news. I can look at runners. I can look at things happening in the market. I can look at the buys and the sells, the top tickers. I can look at all this. It's all fully functional. It's all in one place. It's all compressed. That's the kind of information that I like, that works well for me. It might not be the same for you. Maybe you like to go through 10,000 steps. I don't. I like to just have everything condensed together, it all in one place, it organized. And essentially, that's what the time frame continuity does for you. It gives you that capability. So, sometimes I see you post in different areas of the Discord, and which one should new traders react to as I'm learning. So a lot of the stuff, Clarence, is that if you're just a beginner, sometimes it's best to silence all the notifications and go to the channel that's beginner start here and start there and just kind of work your way through it so you don't get distracted or you don't get overwhelmed by all of the notifications, right? Until you're ready to actively trade. Once you're ready to actively trade, then I would suggest turning on your notifications to buy things. But if you're just learning, I would just go all in on learning. And spend time in like the options beginners, the stocks beginners, those channels, and ask questions, engage with the community. That's where I would start. Taylor, do you have stocks that you always look at, or is there some kind of scan you do for trades? I use FinViz. I've done several trainings on all of my scanners. I'm looking at everything. I don't have a selective list of stocks that I look at. I look at the vast majority of the market every day, every other day. There's sometimes I take a day off and I don't do anything at all related to the market, but I've given away several of those screeners in the Wealth Squad, right? And it's just coming here to the screeners, right? And talking about those indicators, about the 20 being over the 50, the 20 being over the 200, right? You can come here to FinViz, to the screener, right? For those of you who aren't familiar and don't have it, or are just here for the first time, you can come here to the screener, right? And you can input those parameters, right? You can come here, 20-day simple moving average, right? Price, let's just say price above the 20. You can put that there, right? 50-day simple moving average. You can say the price is 20% below the fifth. I usually come over here to where the 20 is, right? The SMA 50 below the 20, right? And then the 200-day, I will say the price is the SMA 200. Oh, sorry, not above the 20. I wanted to say, oh yeah, above the 20. That's what I wanted, right? And so then you can map it out. Then you've got 2,000 opportunities. Now you do it by price. You do it by RSI. You know, you come over here to the oversold territory where we want to buy stuff, right? It obviously is not going to do that because of the levels of the 20 and the 200 of where you have that. So it's probably going to be on the higher side where it's overbought, in that overbought territory, right? In the 60s or the 70s. And you just narrow it down based on your tickers that way. Where do you type in the dollar amount on TradingView? You can do this all in your, you don't necessarily like type in the dollar amounts. Like you do it in your chart settings. I don't know where to go to my chart settings at. I haven't done that for a while, of like adding those things. I don't remember how so you click on this little tool, right? Up here in the corner, this little crank. And this is where you can put different things, right? You could do your bar change values. You could put the volume on there if you want, the titles and the arguments there, the appearance, the trading. You can put the buy sell buttons, whatever you want, however you want to do it that makes sense to you. You can color code your bars differently, your plot lines, your price lines you can change. All of this stuff you can change for yourself, right? So volume I put on there too, right? And that's where you do it all. That's where you do it all. Deontel says, what causes you to join a trade when you use dark pool activity and insider trades? Because the dark pool and the insider activity are people that know more than you do about the market. They have inside information. They have insight into future things. They're trying to manipulate the market so that they earn more. You know, it's a lot of money. So usually if somebody's putting a boatload of money into the market, it doesn't mean they're going to lose. It happens that they do lose that money. But for the most part, if you follow the money, when the market was getting trashed, I started following all the politicians. I started following all the insiders, and my portfolio is thriving. Whenever you do that, like you just follow the money. It's one of the easiest tools to make money in the stock market is to emulate the trades of the people who are smarter than you, the people who have inside information. If you can't beat them, you just join them. Linda, time frame continuity is an indicator for the strat. Yes. It's for the strat, but you can use it for anything. It's just you switching between the time frames. It's just giving you the language that you need all in one place. That's all. But a lot of people who trade the strat use it. Brianna, how do I set up the ATR indicator on stock charts again? So you come over here to stock charts and you scroll all the way down to where these chart attributes, overlays, and indicators are. You come to the indicators and you hit, use the drop down box, average true range. You can change the parameter, but I would leave it at 14. And then you just hit update. And if you want that on your chart all the time, you have to hit update, but then you also have to come up here to this line. Sorry, not that line, this line, and hit save as default. If you don't save as default, you have to input that every single time you load a stock chart, right? Saving it as a default means that it's going to be your default setting for every stock chart you load. That's how you do that. Derek says, what 5 stocks you recommend for a beginner option trader? So look, I think trading SPY is one of the easiest things to trade. If you can learn SPY and study SPY, if you can trade SPY, you can trade anything. You can get wrecked really fast in trading SPY, but it's a good beginner. Or like some of the airlines, there's a list that we have, I think, in the small accounts that we have pinned in there. So you can come to the Discord. I got to log back in. This is delayed actually. Anyhow, I don't know if that's going to load yet. It's slow to load, but you can go into the Discord, go into whatever channel it is, small accounts, and click on the pinned messages at the top of the screen towards the right-hand corner, and you can see the pinned message that has all of the small account tickers that are there. Boeing, Run, a lot of cheap, inexpensive contracts. Those are all really great stocks to trade to begin with. Tyree says, what are you using if you're not using the strat? Look, man, I use support and resistance. Like, that's my bread and butter. I use support and resistance. I don't use all of the other fancy stuff. I look at the 20 in the EMA 5, the MACD, and occasionally I'll look at the VWAP if it's super volatile, but for the most part, it's support and resistance for me. And the ATR, EMA 20, SMA 20, EMA 5, MACD, support resistance. Those are my tools. I don't use all the other stuff. I probably should learn the strat. I'd probably be even more of a beast if I use the strat, but I'll get around to it at some point. I like to just learn things just to challenge myself too, and just to understand the language of a lot of the Discord language is strat. But I just haven't, I've been successful doing things the way that I've been doing them. So I don't really have a need to go and relearn another method, but I might. Omar says, are you going to get GLG or NGM? Yeah, I'm both of those are on my radar. I'm not for sure yet if I'm going to get into those trades or not, but I'm looking at them, the ones that I just posted tonight in research admin. Is the 5 EMA 20 SMA crossover your favorite indicators for entering, exiting trades within the ATR? It's a pretty solid indicator, but it's also like paying attention to the VWAP is important too, especially if you're trading options. Marcus says, can we take a look at some charts and analyze AAL perhaps? All right, I'm going to wrap this up. I'm going to look at American Airlines real quick. I'm not really a fan of American Airlines. I fly Delta, but we can check it out. So, I mean, but that's another thing to go without saying. This is American Airlines. So that also means you should be looking at Boeing. You should be looking at Delta. You should be looking at Southwest. You should be looking at all the airlines. When one of the airlines is running, mostly all of them are running. Frontier, all of them. They all speak the same language. They all sort of run hand in hand, sister companies. So, and sometimes one will run harder than the other one. And it really just comes down to you picking one that you like and just going from there, right? So even for, these are just previous levels that I had on there from way back when I was trading this at one point. But if you look, this is at 1669, 1687 becomes a level of where if it breaks the 1687, the chances are is that it fills this gap right back to 1753. Right? I think that this is probably going to continue. But you really want to come back here in time and map out American Airlines from back here from January to June. These are the levels where you're gonna chart this from, right? And it's looking for previous highs and previous lows of previous days of where it touches these other candles. And you see, I've already mapped it out previously of where that was, right? That next target from where it's at now is 1687. How do you know to get in and out? You're a beast. I tried to do it that way and took mad L's. Tyree, it's really about reading those candlesticks, man, of just trying to find 3 to 4 candles that those support and resistance levels run through, or they rest on, or it creates some sort of consolidation, right? If you don't have those confirmations, it's not really a true level of support or resistance, right? You have to look for those trends and those clues. That's how I do it. That's how I interpret all of the stock charts. Floyd says, how do you change the target price on the chart? The target price is just, you clicking whatever it is, right? You just scroll based on the cursor, the screen here, right? You just put it on this and you just put it on this plus sign and you can put whatever level you want, right? Draw the horizontal line. You just scroll all the way. Once you click that plus sign, whatever level you want. And then once you have it, once you've already marked it, like for instance, I've marked it here, then you can double click it and then you can make it precise. You can make it to a precise thing by just rechanging it, right? That's how you change it. Target prices are all personal decisions anyways, price targets in general, right? It's all a matter of how long you're going to protect your profits for, how much patience you have. That's all that is. Anyhow, y'all, I'm over time. I appreciate you guys tapping in with me tonight. If I missed your questions, I tried to answer as many as I could. If I missed any of your questions, just tag me in the Discord. I'm happy to answer them. And I don't know. I forgot when my next training is. I have to look at the schedule again. But I'll do a second part of this on some of the other ones, the Bollinger Bands, the Fibonacci's, the stochastics, some of those things too, more advanced indicators for you. But I appreciate y'all. If you got any questions, let me know. Tag me in the Discord and let's run it up this year, y'all. Well Squad forever. Have a good night, y'all.